Presumably, there'll be much more debate on the so-called no-landing scenario once we get minutes from the Federal Reserve's two-day meeting. They're not the only things, though, that investors are keeping an eye on. The PCE price index, that's the Fed's most closely watched measure of rising prices across the economy. It's due Friday. For more on why investors are focusing on inflation, let's get to Yahoo Finance's Alexandra Semenova. So, Alex, obviously, a lot is going to feed back into that no-landing debate this week, but PCE is going to be big. The minutes are going to be big.
Absolutely. So it's been really interesting to see the transition in the past year and change from the Fed talking about inflation being transitory to now having all these various and nuanced looks at how quickly prices are rising across the economy. This week is all about PCE, which is the Personal Consumption Expenditures Price Index, the Fed's favorite measure of inflation. So, first it's worth highlighting the difference between CPI and PCE. CPI sources data from consumers, while PCE sources data from the business side. The Fed likes it more because it gives them a broader look at the inflation picture. One good example of one of the different measures is medical expenses. CPI only tracks what consumers are paying out of pocket versus PCE, which also tracks what employers are contributing. So it's really giving the Fed a more nuanced picture. We got CPI last week. It showed that the inflation picture is not improving as quickly as people were hoping, and we're expecting the same thing with PCE. We're expecting a monthly jump of 0.5% in January compared to 0.1% in December, and the headline number is expected to come in at an annual 5%. That's no improvement at all from the previous month. Importantly, like with CPI, the Fed does look at core PCE as well, which strips out food and energy, which tend to be more volatile. It gives them a better look at components like housing, which of course we've seen prices go up for. And of course, there is something called Supercore PCE, which a lot of people have been talking about, the Supercore element of these inflation reports that takes out food, energy, and housing and gives the Fed a picture of services inflation. Think haircuts, gardening, electric work. This is important because this measure is really closely tied to wage growth, which we know has been a problem for the Fed. It's been persistently high and kind of, keeping inflation stubbornly high overall. Fed Chair Powell called it the most important category for understanding the evolution of future core inflation. However, for the U.S. consumer, it's still that headline number and the core number that is really important because it tracks the most important measures weighing on U.S. households, which is the price of food, the prices at the gas pumps, and the price of shelter, of course.
Supercar sounds like the next fitness class boutique style that we have yet to see start in New York right now. But I mean, the significance of this reading this week, what's that going to mean for the markets?
Yeah, so in the past couple of weeks, we've really seen a massive transition in sentiment about the inflation picture and about where rates are going. We started the year with a lot of optimism that the inflation picture was improving and that perhaps the Fed might pause and even pivot this year. And now investors are starting to realize that is not the case. We're seeing inflation is not coming down as much as they had hoped. And this PCE reading, if it does come in at that level or even to the upside, then it could be a lot to run with for the bears. We could see some more downswings in markets.
Yahoo Finance's own Alexandra Semenova going to be tracking all of these things and much more. We'll check back in with you later on. Thanks.
Thank you.